Through impact investing, it may be defined as achieving social impact by supporting social enterprises while generating financial reforms. So we have the Singapore Center for Social Enterprise supported by the Singapore government. And the Singapore government has initiated decentralized initiatives to promote impact investment. That means to say that instead of undertaking their own, they are supporting the Singapore Center for Social Enterprise to undertake this job on behalf of the initiatives and the programs, directions of the government. So today, we're privileged to have the presence in the summit of the Singapore Center for Social Enterprise, or RACE. I hope we can learn some valuable lessons from the experience in impact investment. Just a few words on this. I have met my old friend Alfie Othman, the CEO of RACE, in a meeting in UNSCAP last December. And I was very glad to see him. And after his presentation, I asked him, Alfie, can you help us in the Philippines set up our own impact investment? I have seen in the face of Alfie the broadest and sweet smile, because that's one thing that he wanted to hear. Now, he told me, of course, Ben, we're going to help you. We're going to share with you all the resources that we have. And so for this, I thank Ong Hoy for representing RACE here. Really gratitude, heartfelt, for this open-hearted, offer to help the Philippines have its own impact investment fund for social enterprises. Thank you. Over to you, Rodmark.
Thank you, Dr. Ben. Thank you for that very insightful talk. And thank you for that segue to our introduction to our next speaker. Ms. Ong Hui Yu is the Collaborative Financing Lead for Singapore Center for Social Enterprise, or RACE. Ms. Hui is the Collaborative Financing Lead, and I already said that she forges collaboration with partners from the public, private, and people sectors to build the social enterprise ecosystem and accelerate impact. Recent examples include the Purpose Agenda, RACE's inaugural Impact Investment Conference in 2022, and Singapore's first Pay for Success project in 2021. She is also part of the venture building team and nurtures the growth of social enterprises through grants and investments. She graduated from the London School of Economics and Political Science and spent some years with the Ministry of Foreign Affairs before joining RACE. Let's all give a warm welcome to Ms. Hui.
Good afternoon, everyone. My name is Hui Yu, and I lead collaborative financing initiatives at the Singapore Center for Social Enterprise, or RACE for short. So we were set up in 2015 by a few government agencies to develop the social enterprise ecosystem and nurture the growth of social enterprises in Singapore. So as a membership body, we currently have over 360 social enterprises, cutting across many business sectors, from F&B, logistics, to healthcare and education. And in the past year, we have grown to close to $250 million in sector size. Next slide, please. So when we started, it was about raising awareness of the social enterprise model. Now many people have an idea of what sustainability means and why it's important to be socially conscious. Social enterprises themselves have shown that they can survive the market and rally others around their social goals. We also know that to be relevant, businesses must continually demonstrate long-term value to their customers, their employees, and the communities where they operate in. So consumer patterns have changed, we know that. They are voting with their dollar, and especially so among the younger generations. Employees themselves are bringing these same expectations to their employers. They want to work for companies with an authentic organizational purpose. Right, so players who want to stay in the game need to embed purpose in the strategic core of their business. Right, this means extending beyond CSR initiatives to show that they are genuine about doing good, and not just that, but they are in it for the long haul as well. So corporates themselves are getting more involved. We already see that. Some MNCs are making very intentional efforts in the space. Some have launched their own accelerator programs, set up grants and funds for social enterprises in particular, and we actually see some VCs even following in these footsteps. So, as private sector players move beyond ad hoc programs and start identifying their long term impact strategies, we see there's definitely a lot of room for social enterprises coming to the fore. Right, and we know Singapore is certainly not the largest recipient of social investment, but it remains the choice destination for offices to manage their investments because of its economic and political stability. Same goes for family offices. We are seeing increased participation from this group in recent years as younger generations take the helm of their family wealth. And I would say there is a discernible change in investment philosophies among this new generation of wealth owners. In certain cases, and it's not just compliance, the investors are interested in companies that have given careful thought about the impact of their activities. Because we know companies who shortchange the future are unlikely to do well in the long run. Right? So the business case for sustainability is clear. And of course, social enterprises have embodied this pursuit from day one. They provide meaningful and innovative solutions to social gaps while ensuring the business stays viable so they can sustain that impact. So definitely, we believe that with this strong alignment, we are actually primed for closer collaborations between social enterprises and the bigger corporates, family offices, and foundations. Those that are looking to embark on the impact journey or have a think about their impact objectives. Next slide, please. So in this diagram, we see that there's a spectrum of companies from the traditional ones at the top who avoid doing harm but continue business as usual with corporate giving on the side, moving down to charities or social service agencies down at the bottom that are funded by donations, philanthropy, and public monies. We can see social enterprises sit in the middle of this as they prioritize doing good and also have a measurable social mission at the heart of a sustainable business model. So for us at RAISE, we work closely with all four of these groups to develop the social enterprise ecosystem. For example, we have conversations with corporates to bring them closer to the social space, explore how they could contribute beyond ad hoc programs, to maybe procure from social enterprises or partner with them on social innovations. What I'd like just to highlight at this point is that whether SEs are looking for financial or non-financial support, what they have found to be very useful is to leverage on our networks across all these sectors. Right? And that's just one part of RAISE's role in the ecosystem. So social enterprises, they operate in a social economic nexus and sit in a very unique position to drive social innovation and sustainability. And to move even faster, they can count on the multiple layers of support from different groups of partners in the ecosystem, relationships that we have cultivated with the institutes of higher learning, the government agencies, the multinational companies. It's about harnessing the strengths from different players, forging collaborations to make even greater impact. And this is where RAISE really comes into its own, right? I mean, deal sourcing is time consuming, takes a lot of work to find the right opportunities, especially without a sufficiently broad view of what is available and investment ready. So we provide this key perspective. We connect interested funders to social enterprises. And it's not just funding. Private sector partners can also impart discipline and due diligence skill sets to deepen the capabilities of the social enterprises. And I would say this symbiosis can spell enormous social returns for society. Next slide, please. So at RAISE, we provide non-financial and financial support to social enterprises. And very broadly here, we are organized into two teams, the venture building team and the ecosystem development team. What I've listed here are our areas of work that I'm going to elaborate on. So as part of our capacity building efforts, we have a series of programs, workshops designed for social enterprises that need help with specific segments of their business or impact journey. For example, for new social enterprises, we have a 2-day workshop to help establish the fundamentals. Budding social entrepreneurs learn how to create social impact through a design thinking process, maybe explore market opportunities that intersect with social needs, or how to measure social impact using our social value toolkit. For charities and small and medium enterprises interested in the social enterprise model, RAISE also has a 5-month program known as Reimagine. What we want to offer that's incredibly useful is the knowledge transfer. Right, so we bring to the SMEs mentors that are familiar with the impact space, and for the charities, people who can provide private industry expertise, guide them on market research, consumer demand, product validation, things like that. So, a third example, we also organize a fellowship program to help social enterprises build organizational capabilities. And for this, over a course of 6 months, they will take the fellows' guidance and strive for concrete goals. Right? To give an example, like to reduce costs or increase revenues by, say, 10%. And these fellows, they are leaders in their own respective fields, right? And depending on the SE's needs, they can be matched with a fellow who has experience working with specific beneficiary groups, say if they're interested in inclusive employment, or a fellow with marketing expertise if that's the area they are lacking now. On the right side, in terms of financial support, RAISE provides grant funding for new and existing social enterprises as well. So more mature social enterprises can explore the possibility of tapping on our convertible grants, which we also provide, and that's for a longer term. But actually, as a venture builder, right, it's a lot more than that. Beyond funding, there's also a lot of focus on building business capabilities, understanding their challenges in a more intimate way, standing in their shoes to battle the problems that arise, maybe help to have a think about where they wish to go next in the next 5 years, 10 years or so. So I've talked at length about our role as a network provider earlier, and I'll get to the part of validation a couple of slides later. As for stakeholder and knowledge management, we build thought leadership as well. And it's not just by participating in research in the academic realms, but also with the data that we have accumulated over the past 7 years. We have worked with the British Council on a study about social enterprise landscape in Singapore. We also actively seek to transfer knowledge and influence wider audiences as we advocate for social enterprises. So you can check out our podcast series where we add our conversations with partners and stakeholders on their thoughts about partnering with social enterprises. Next slide, please. Yeah, so a little bit more about how we lend accreditation to social enterprises in Singapore. It's a bit different from a couple of our neighboring countries in the region. Right, in Singapore, we see social enterprises as business entities with a clear social mission, meaning that they are dedicated to allocating resources to fulfill their social objective. And at the same time, they should aim to make a financial profit, not only to be sustainable, but also to expand and scale up their impact. So for us to evaluate whether an entity can join our social enterprise network, we speak with them to try and understand, first of all, if they are creating social impact, and just as important, if their business model is a viable one that has been validated by the market. On the impact side, they must at least dedicate 20% of their resources to achieving social goals. An example would be, where you make a conscious effort to employ beneficiaries and they make up at least 20% of your workforce. So this could be people from low-income households, could be single mothers, could be persons with disabilities, could be those with mental health conditions as well. We are impact agnostic, and as long as you're able to show that they have a disadvantage in some ways, we'll support their employment. So for business viability, the other criteria, they must show that at least 50% of their revenues comes from sales or trading income. And these are, of course, just very rough benchmarks to indicate the level of intention when it comes to delivering impact beyond ad hoc projects. And At the same time, they can survive in the market to sustain themselves entirely through their own business streams eventually. We have definitely come across aspiring social enterprises that may not have met this criteria yet. So for them, we can provide a provisional membership for a year for them to establish some form of track record of social impact before converting them to a full membership. Next slide, please. So for venture building, in terms of financing options, as I mentioned earlier, we offer not just grants, but also investment opportunities. And really it's so that we are able to work more closely with each of the members in our portfolio, right? What is key to note and very fundamental to our role as an ecosystem builder is to be the provider of first funding for these young startups. So we are here to give them a shot, provide the patient capital, handhold if need be. What is important is to give them the push they need to stretch their capabilities, the resources to scale their business and impact in Singapore and eventually in the region. As you can see, we have various tiers of financing options. We welcome grant applications of up to $300,000, and the bulk of these go to supporting social enterprises that provide employment opportunities for the disadvantaged, as I mentioned earlier. And for our Impact First investment portfolio, currently we have about 10 active investments. So they span 7 industries with a combined annual revenue of about $16.5 million. Right, the ticket size is larger, from about $300,000 to $2 million, and this is mostly through convertible grants. Although in the early days we did offer debt and equity as well. So to date, we have committed about $8.5 million and have seen 5 successful exits, 3 others co-invested. 2 more are in the middle of their next capital raise actually. But with grants and investments alone, we are still not satisfied for sure. Now that RAISE is in its 8th year, we do recognize some limits in the type of funding that we can make available for our social enterprises, especially for those approaching growth stage. Social enterprises are looking for strategic investors in their respective domains, right? Say healthcare or edutech, and they're looking for larger funding quantums to scale their impact. So there is a lot more room for other funders in the ecosystem so that it can grow even faster. And really, I see it as my key responsibility to bridge them with new funders when they are ready. We want to bring other partners into the ecosystem, corporates, foundations, who are also looking for more sustainable ways to create impact beyond just doling out checks to charity projects. So this is a very important part of my job, to harness the catalytic power of our funding. So it doesn't just end there. So we actively go out there, speak to private sector partners, understand their impact goals, introduce our social enterprises, and explore creative avenues to propel them to the next stage of growth. So one example that's very close to my heart is the Pay for Success pilot that we launched in 2021. The aim was to strengthen job retention outcomes for individuals in recovery from mental health conditions. Investors, including J&J, provided $500,000 in upfront funding for a social enterprise to deliver the intervention. And the pilot was uniquely structured with some risk-sharing mechanisms in place, such that the investors themselves, they are guaranteed a portion of their principal should the initial targets go unmet. Right. And in turn, when target outcomes are met, the investors can look forward to an upside from the outcomes funder and recycle it in other areas of impact. We also had our inaugural Impact Investment Conference last year, where we gathered impact investors and trailblazers who shared their insights and learnings with those new to the space and aspiring to do more. The dialogue actually paved the way for greater collaboration and partnerships, and we hear that within half a year of the conference, a corporate has collaborated with a PE fund on a new Impact First fund to support social enterprises. Right, so besides this, we have also set in motion some other plans for the coming year. I believe I've taken quite some time in my introduction, but we are working towards our second Pay for Success and also looking forward to set up a social impact fund. So I would say yes, we are very excited. So do keep a lookout on our channels for the plans that we have lined up this year. Thank you. Back to you, Rodmark.
Thank you very much, Miss Wei. That is quite impressive what you've done, what you've been able to do in just 8 years in Singapore. And um, so, thank you very much to both of our speakers. We will now open the room for questions. If anybody from our audience have questions, please just input your questions in our chat box. Meanwhile, maybe I can start the ball rolling with a few questions for both our speakers. So I'll start with Miss Wei. You mentioned how you mentioned the process of how you help social enterprises in Singapore. I'd like to ask, maybe for the benefit of our audience, what is your process in searching for specific SEs in Singapore? How do you come to know about particular SEs and which SEs to partner with?
Okay, thank you for your question. Yeah, so that is something that I think over the years we have leveraged a lot on our networks, both sides, right? We are, to a certain extent, a government funded agency. So we have our networks with the respective charities, for instance. And so that's one source of referrals, you would say. Say when we go down to the center that looks at people with disabilities, that's where we find that, hey, certain companies are already working with them, and it could be specific disadvantage. It could be for the visually impaired. It could be for the intellectually disabled, for instance. So that's where we find that a lot of these companies have been around, maybe even before we have been, like since 2015. And that's where we go in and we try to understand how else we can accelerate that growth. And some possibly actually may at the start be more inclined towards a charity model or a grounds up model. That's where we also start our education or influence over how we think social enterprise model may be maybe to a certain extent more sustainable and more efficient for them to carry out that impact. So we have a few in our network that were previously, say, a charity or halfway house, um, or maybe like part of the church, for instance, but they spin off to have a social enterprises. Yeah, so that's one segment. Um, on the other hand, we also, as I mentioned just now, we have some close partnerships with VC firms, for instance, in our startup space. We actually operate from sort of like the startup community in Singapore at Launchpad. So, just sometimes very informal meetings, chats over coffee, and we get a name or two from others that are doing already the meaningful work in the space. This can be very young founders actually. And we also have partnerships with the IHLs, the universities, with a few with SMU, with NUS and NTU. So we actually go right there into their university before maybe they have even decided that they want to do this, for a long time. So we also start our conversations from there to try and inspire them, show them success stories. And I think the emphasis is to be genuine about what we are advocating here. We don't just show the positive side. We don't just show like the unicorns or the profits that you generate like maybe 5 years later, but we try to show them behind the scenes, right? The nitty gritty. We connect them with founders who have already paved the way, and yeah, and I think that's where the real story starts.
Just to give us an idea, Miss Hui, what would be one of the smallest in size? I mean, venture-wise, in size, what would be the smallest partner you've had in terms of the size of the SE?
Oh wow, okay. I'm pretty sure we have one man shows around, or even okay married couples. Yeah. So and
Oh,
sometimes
wow.
we're not sure whether the enterprise will make or break their relationship. But yeah, that's real life, I guess. When
Yes.
you promise to ride out even through the waves. Yeah, these are really some of the smallest. And it can be a married couple running a cafe, or even out of your mom and pop shops, employing those from the disadvantaged groups. Yeah. So really, I think as much as one or two. Yeah.
That's awesome. So taking from what you said, um, it would seem that the network that you build and you're still building is very important in not just finding the right partners or the right social enterprises. So taking from that, I'd like to ask Doc Ben, because you mentioned in your talk, Doc Ben, about the financial intermediation system for social enterprises. And I think you have some ideas on how we can work on this in the context of the Philippine setting. Maybe you can. Would you want to discuss this a bit more? How do you think can we use maybe like the example of the roadmap and the governance system that we're trying to build now with this roadmap initiative? How do you think can we have that financial intermediation system very similar to what Race is doing in Singapore? Doc Ben, you're still muted. I'm sorry.
Sorry.
There you go.
Uh, Given the variety of organizations participating in the National Governance Council, you have foundations, you have academe, you have cooperatives, foundations, micro small enterprises, and social enterprise. Yeah? So you have this array. Yeah. Now we would like to encourage them, to go towards the SE development. Yeah. So we have some criteria. In fact, I wanted to ask Ms. Hoy, uh, but later on, with respect to this challenge, because in evaluating, we might have to prioritize, and there might be enterprises that do not qualify because we prioritize, yeah, given the resources. So later on I would like to ask, but I will raise the question now and then come back to my answer to Rodmark. I would like to ask Ms. Hoy, what percentage of your the enterprises you evaluate do not qualify, and what kind of process do you initiate for them to qualify later on, or do you reject them entirely? Yeah, please reflect on that, and then after my intervention, you can answer my question, because this is our challenge right now. Okay, we have several types of enterprises, and according to the research uh, done by Bain Academy, not all of them have the same concept of what a social enterprise is. Yeah? So some of them will say, well, it's a small enterprise, and then when it generates profit, it's not a social enterprise anymore. Or when it gets big, it's not a social enterprise anymore. So there's so many, perspective, because the governance council, the framework we have, we did not start as what you have done. You were intentional in looking for social enterprise. In our case, we want existing enterprise to come on board, yeah, and then we would like you to imbue them with the concept that there's another way of doing business, doing good, and this is the social enterprise way. So the financial intermediation system will have to bring together different kinds of funds: charity funds, microfinance, long-term funds, equity funds, uh, credit funds, all of this, because they are there already. They are there already. Foundations, are already providing charity. Microfinance are already providing microcredit. So there is already a lot of initiatives out there. The challenge for us is this: how do we now bring all of these initiatives together so we could have a concerted effort in developing communities, not only enterprises but enterprises, that community, where we can go there, as a sort of a uh, synergistic organization or company. Yeah, we have the foundations there, cooperative, and so forth and so on. So we need to have a system so that all the funds, can come through this system and say, okay, when it is charity, it should be like this. When it is microcredit, it should be like this. When it is debt instrument, it should be like this, so that uh, For example, in communities, we don't only need production loans or production investments. That's short term. Yeah? We need investments for asset formation. We need water pumps. We need other sources of power, and this requires lump sum investment, long-term investment. So we have to have a platform so that we could connect, all of this. Now, if we have this platform, now we can talk to Race, yeah, in Singapore and tell them, okay, you are very intentional in your approach, yeah. We have this platform here. Okay, we can evaluate and identify for you what are the enterprise already at that stage where you can engage them. But there are still so many here. They still have to know what is a social enterprise. We need to have capacity building. We need capacity building funds here. We need donors to put their funds here. So this is what I have in mind for the intermediation system. It's not a one kind of fund, because we have different, so much, development areas where we need to really finance, you can imagine our rural communities. They do not have assets, yeah. They have only the land, yeah. The farmers only have, this plow. They don't even have a, tractor, yeah. So, in other words, you need to have a platform to bring in different kinds of investors or funders, so this is what I have in mind. But you see, developing this system is also a collaborative effort.
Yeah.
So as I was saying, we need a technical working group to bring this together. So that we can harmonize. We can harmonize, and then later on we can pinpoint, say, okay, Race. No, we have identified social enterprise here. Maybe you can already look at them, yeah, and help us look for partners for this social enterprise, yeah. But maybe 80, at least 80%, of the enterprises that we're going to enlist, because the enlistment registration is open. Maybe 80, 85% will not first qualify to be social enterprise. They are just business there. They want to do good, but they don't know how, So this is the situation here in the Philippines. That's why we need this platform. I hope I answered your question, Rodmark.
Yes,
Yeah.
thank you very much, Doc Ben. Actually, that's why it's exciting times for all of us here working in the national roadmap, because exactly just like what you said, we're trying to create that structure and that governance system to try to bring all the major players of the social enterprise sector together. And
Mm.
although it's such a daunting task, but we have to start somewhere. We have to start trying to bring everybody to start working with each other. At the end
Mm.
of the day, everybody's trying to do some kind of development work. And
Yes.
so thank you. And that's very exciting, actually. And maybe we can get back to Miss Sui with the question of Dr. Ben.
Yeah.
Uh,
So
what
imagine the
percentage
80% that we have here.
among in the 8 years that
How-
you've been working? Yes.
yes.
Yes, thank you, Dr. Ben, for your question. So, if I have to be honest, right, of our membership base, I would say I think just about 20% would be grantees, meaning that they're recipients of our grant funding at the first level, right? So,
Mhm.
obviously, we
Okay.
know it's as you have rightly guessed, it's not a majority, it's not even halfway there, right?
Yes.
So, and I
Yeah.
think what we do recognize is that there are so many social enterprises of many various stages, and when we assist, we want to do it in a way that's useful. We don't want to go in with a very prescriptive approach of what we think is the right way or the only way. We have to
Okay.
embrace that diversity,
Mhm.
not just in terms of their origins, but also founders' personalities, as you would know, right? I mean, they have different motivations for why
Yes.
they want to go into the enterprise. They have different ideas of where they want to bring it, different time horizons actually in terms of what they can commit to bring the enterprise to the next level. But
Yeah.
at this point, I guess I could maybe share a little bit more about how we do that as a sector developer in Singapore. So I suppose there's a bit of a unique structure that we have. So we already have a pot of funding that is given to us to develop the sector, right?
Okay.
So in that sense, we partially don't have to, spend our time raising the capital for ourselves. So it is our KPI, our mandate to nurture the growth of social enterprises with this funding. So to a certain extent, we are, I would say our returns are humble, of course, right? When we invest in them, but we do demand sustainability from these enterprises. And in return, any return that we get, they are recycled back to the sector. So we're actually being accounted for the capital. And in terms of different financing options for different social enterprises, I would say it depends really on the stage of growth that they are at, the founder's vision for the company. Just sharing from our experience, what I mentioned earlier, how we started out with loans and equity options, but now we are actually just offering convertible grants in terms of on the investment side, right? Because what we have learned is that loans can be a significant burden to social enterprises.
Yes.
Maybe know that when they start out, cash flow is very unpredictable. On the other hand, there may be greater flexibility when it comes to equity. But then again, you don't want to overcrowd your equity at that early stage either, right?
Yeah.
So in this case, we found that convertible grants is more attractive because on one hand, your cash is freed up for day-to-day operations.
Yes.
At the same time, you save on the lengthier process of issuing stocks at the onset. I think very few people want to get into that from day one,
Yeah.
So my advice would be, to first think about how you want your business to look like in 3 to 5 years. And I think may not be a popular advice, but to take a cold, hard look at your business needs. It is easy to get too carried away by that moment of passion, being a change maker and everything. And also based on what we know of the enterprise in our networks, most do not have a full-fledged board, right? Just now, from our question on how small can they be, right?
Yeah.
We don't even have like a management team. And
Okay.
so, really, if I may generalize, some founders can be a bit more capitalistic in nature. So they would be concerned about the cost of investment. They do need the capital raise, but the numbers are important, right? Then you have the second type where they are a bit more social in nature, but they will instead question if the impact might be diluted depending on the type of investors that they get, right? Then that's something they're very protective of as well. So that's how we came to the idea of the option of convertible grant, and of course that's after a few years of trying out ourselves. So that's one thing perhaps I can share, after the years of experience that we had. So
I like that convertible grant. Yeah.
yeah.
Yes.
Yeah.
Yes.
That is a good term to learn. But pardon me, Hoy, but I just like to follow up. Do you have a training program, as a requisite for this enterprises to access, your convertible grant scheme?
Like a
Or
remediation program.
something like that, I mean, it's a way of really screening, but you want them to familiarize with your way of doing things, is there something like that, where you really try to size up or evaluate, whether an enterprise really into social mission, do you have capacity building programs like that,
Yeah,
or training
so
programs?
that is mostly covered by the other team at Race that I mentioned just now,
Okay.
the capability development team. So
Okay.
we have broader based initiatives, for instance, like encouraging conversations with potential investors. We build up the platforms to connect them. Could be informal chats at our office, or we work with say bigger corporate, for instance, in the healthcare space, connect them with social enterprises in the healthcare space. That's another way to sort of borrow on a different perspective when it comes to scaling their business to the next level. That's one of the broader-based initiatives. We have those that are a lot more targeted as well. So, before you even look at capital raising, you need to tweak or refine, like say, your marketing capabilities. You need to check your product validation. So we match them with fellows who are strong in these areas. And after you gain that trust and you build that relationship, whether you might take advice from them to go to the next level. So
Okay.
we do understand that not all the magic happens in workshops and seminars
Okay.
and trips.
Yes.
So we are very focused on creating that chemistry. I think that chemistry is when you wake up and feel like you want to put in your dues for the day. And
Okay.
I think so. Actually, I mean, going back to considering finance options for these social enterprises, it really depends on their own expansion strategy as well. So we tend to be open ended. We go to them and ask them, hey, what do you need help with?
Mm-hmm.
Rather
Okay.
than force our own programs and workshops down
Yes.
their throats.
Yeah.
Yeah. So for instance, actually, we do say that for some of them, maybe capital raise is not it's not the first thing that you should be looking at, right?
Yes.
Because you may not find the right people at the right time, as we know.
Yes.
So some investors, they can be more patient, more nurturing. A sector developer like ourselves, you would expect us to have patient capital, so we can provide that. But not every corporate or a fund would just have that as their priority.
Yeah.
So when you have gotten your house more or less in order, I would say then it may be more compatible to start looking
Yes.
at investors that are a bit more aggressive. You want people that can push or stretch you. So then I would say the capital raising at different stages when you go into the different stages of the business cycle as well. And it's important to know where you're at, and also to if you determine that right now is not the time to raise capital, and like what you said, whether they can look forward to certain training from raise,
Mm-hmm.
definitely
Yes.
we have that. Yeah. So
Yeah.
thanks, Sydney, for sharing the link to our website. But there is a range of programs. I can list them all, but they will just be names to you. But
Good.
you
Yes.
can have a scan of the sort of the offerings that we provide, the benefits that we have for our members, and we can
Yeah.
have a further chat on that. If I connect you to my capability development colleagues. Yeah.
This is really very important, Ms. Soy, because you see, we have the partners there already, but we don't know exactly, what they can offer. In your case, you have already linked them, because they have identified their resources and so forth. So in your mind, it's very
Yeah.
easy to link them. Huh? But in our case, we're just starting, But the actors are there, That's why we
Yes.
need a model, We need a model that we can learn from, so that when we engage these different actors, and say, okay, capacity building is here. So how do we, walk these certain prices so that from no capacity to capacity, and then they're ready, for this convertible grant. Yeah. So these are the challenges that we have right now. That's why I was thinking, we've got to have a platform, platform,
Maybe
and we need to
maybe
create
Doc
it.
Doc Ben,
Yeah.
just to give more context to Miss Wee also, no. The
Yeah.
latest
Yeah. Please.
study shows that there are almost 150,000 social enterprises in the Philippines currently. But the biggest problems for an overwhelming majority of the social enterprises is, first, many really come from that NGO mindset, working on that model that to be a social enterprise, you have to be a non-profit, or you cannot make profits. So the mission is there, the heart is there, but just like what one of our mentors always tell us, many social entrepreneurs have bleeding hearts, but then when
Yes.
it comes to the business side, they forget about it. And he always reminds us that social enterprise is the noun, and social is just the adjective. So you
Adjective.
have to be a sustainable business first and foremost. And
Exactly.
so that's one of the biggest problems, having that mindset for the social enterprises in the Philippines. Another huge problem is that many do not know how to measure their impact.
Mm.
So sustainability and impact measurement is still a big challenge for many players in the social enterprise sector in the country. No, maybe we have a few questions. Maybe we have some time for a few more.
Mm.
Mr. John Francia asked, correct me if I'm wrong, Miss Wee, but did you mentioned at least 50% of SE revenue should come from business operations? Does that mean it's it's acceptable for the remaining 50% to still come from grants or donations?
Yeah. So that is exactly the kind of scenario that we try to provide. I mean, we have to be realistic about the issues that the social enterprise face as well, their challenges. So we kind of set this as an ideal so that minimally
Yeah,
at the end of the
fantastic.
day, right, 50% we can say is from the trading revenue of your own product. Yeah.
Mm.
So if you do
Okay.
need, in a way, some form of
Especially for startups.
subsidy, yeah, to begin with, that's fine as well. And that's why through the course of the membership with us, we try to progress with you, right? I mean, if as long as
Mhm.
we make certain benchmarks from like 40% to 50%, 30% to 40%, that's what we try to do. Yeah.
Mhm.
Just maybe there are a few more questions, but maybe just a few more here. I'll put two questions together. One is, do you accept funding? Do you fund SEs from other countries currently? And also, what type of, do you have a target focus or mission that you are more inclined to grant than others? Maybe like, are you for community development or for education? So can you answer that, Miss Wei?
Yeah. So, like I mentioned just now, we are an impact agnostic. As long as
Okay.
the applicant is able to show that they are helping disadvantaged groups in one way or another. So, sometimes it doesn't have to be employment. It can be capacity building as well. Say,
Okay.
for instance, you're helping charities to be more efficient. You know, if that's your
Mhm.
product or service.
Mhm.
It can
Mhm.
also be increasing affordability of services for the disadvantaged groups. So
Mhm.
various ways. Again, yeah, you can have a look at our website on the grant funding tab to have we have some examples there. And for the other question that I'm very excited to hear is yes, we do have an accelerator program actually together with a VC firm in Singapore that we encourage applicants even beyond Singapore.
Mhm.
What I do need to highlight is eventually when it comes to funding, we do require that they are registered in Singapore.
Mhm.
Yeah. So
Okay.
and yeah. So it doesn't the impact can be from overseas, but minimally I think if you try to have some impact in Singapore as well, that would be good. But our criteria is Singapore registration. Yeah. The program that I mentioned was Sustainable Impact Accelerator. So yeah, we actually are on our second run of that cohort. We saw applicants from not just Philippines as well, Indonesia, Vietnam. So yeah, and we see that we want to create that momentum in the region, right? Why go even further like Europe or Asia when we have that community already here in Southeast Asia. Yeah.
Yes, that's true.
Yeah, thank you very much.
Okay.
There's
Yeah.
so many questions, but unfortunately, we don't have time. This talk deserves maybe a whole day just to
Yes.
discuss, because there's really so much need and so much interest for social enterprise development and impact investing. And
Mm.
unfortunately, we'd have to end our session. Maybe just a reminder for everybody, for those who wants to join the roadmap, join us in the roadmap. The link is in the chat box. Maybe if I could ask Dr. Ben and Miss Wee to give your parting thoughts to our audience, we could start with Dr. Ben first.
Yes, I would just like to reiterate, our intention, Ms. Oy, to partner with the Singapore Center for
Definitely.
Social Enterprise. And in fact, we're looking forward to the intention because there was great interest in your part, in the part of the race, to come to the Philippines and meet with us in person, So we
Exactly.
would like to follow that up because there's so much questions I have in mind. We're just, developing the concept, of funding, and we have so much to learn from you. So on this note, I'd just like to convey our thanks to you for being open-minded. The heart of really helping, and I hope that this partnership will flourish in the days ahead. Thank you very much.
Thank you, Dr. Ben. Miss Wee, any parting thoughts for our audience?
Thank you very much for the kind words from both Dr. Ben and yourself, Rodmark. And I think after the context that you helped to provide for the current situation in Philippines, I mean, I fully appreciate the work that you guys have to do. And of course, also ending with like a very sincere invitation for you both and your team to come down to Singapore to
Yes,
have your own
we'll do that.
personal glimpse at what
Sure.
our ecosystem here is like. Not just the startup community in the launchpad that I mentioned earlier, but also looking at the partners that we have. Just getting a sense on the ground on where, I mean, possibly you might be inspired to bring some of this back to the Philippines as well. But I do remember the plans that we have. I will bring it back to L3 for sure. Yeah.
Thank you. Thank you very much.
Yeah, thank you very much to both our speakers. And in parting, social enterprise and impact investing by definition proactively intend to create positive impact as well as generate profits. Such
Yes.
a for-profit orientation has a twofold effect. Financial return as potential increases the attractiveness of opportunities that produce a positive impact, drawing more private sector capital to areas that promote development. Uh, on the other hand, private sector participation and the opportunity to generate returns spurs innovation and growth. Commercial capital pushes enterprises to experiment with new businesses with new business models, capture new opportunities, and drive for greater impact. Both private and public entities could benefit from viewing social enterprise development not only
Mhm.
as a responsibility but as a financially or strategically valuable investment. Based on this concept, we could use the National Social Enterprise Development Roadmap and its Governance Council to advocate investors, corporations, and policymakers to explore the potential of social enterprise. Maybe with the help of the Singapore Center for Social Enterprise or RACE, we can come up with a framework for action in the very near future, maybe in the coming months, to enable the exploration process to start. So
Yes.
again, thank you very much to our kind speakers, Miss Wee, that you shared so many things. Dr. Ben, also thank you as always, and to our audience, thank you very much again. If you want to join the Roadmap Initiative, the link is
Mhm.
in the chat box. Please just go to the link and fill it up and join the initiative. And I will see everybody in the main room. So, again, thank you, everybody. Goodbye and see you in the main room. Thank you very much, Miss Wee. Dr. Ben, thank you very much.